My dear friends, Igor Pechkovsky is here with you with Windermere Bellevue Comments, your trusted advisor on real estate in Seattle and Eastside metro areas. Today you have to excuse me, I don't have my blazer on. I always thought that it makes me look smarter and better, but it will be a quick, nice, easy video, so I didn't put it on. We're gonna bombard through numbers. I'll tell you exactly how things are without any sugarcoating. It's not pretty. It is what it is. I'll tell you where the numbers are on the east side. I'll tell you where the numbers are in Seattle. We'll make it quick, nice, and easy as always. So stay tuned. Let's dive in, and here we go. So first things first, we have to address it either in Seattle or in the east side. We are getting more and more inventory. So there are quite a few homes to choose from. I'll show you figures on each, but they are the same in the aspect that over the course of last months, both areas added roughly about 300 homes each, either in Seattle or on the east side. 300 homes in 1 month. We're looking on the east side, our inventory currently is almost at 3 months of inventory, 2.9 months, meaning that if there are no new homes come to market, it will take 3 months for everything to sell off. If you're looking at these graphs, that high of inventory count we didn't have in almost a decade. It's been a long time since we had so much inventory to choose from on the east side. Obviously, the 2021, in the peak of low interest rates, there was no homes to choose from. And now we have quite a few, and we added 300 of them just months over months. 30% year over year, but still just in the last months, there was a big jump. Why is inventory keeps increasing? Well, that'd be a wild guess. I think there are quite a bit of uncertainties out there. First of all, we had some layoffs that are affecting our areas. I don't think the layoffs is the main reason for this inventory to be so high, but at the same point, it's uncertainty about AI as the whole. Second, Iranian war, right, doesn't really get somebody excited to pull the trigger and maybe buying the home right now. High interest rates. You got to remember, these homes are really expensive, not just by the price. Well, price is one thing, but then you add 6.5% interest rates, and these interest rates are continuing to go up. That just doesn't help any kind of affordability. And then in particular, if you look in Seattle, there are so many new townhomes. The inventory of townhomes just keep on growing. So that is probably just 300 homes itself in 1 month right over there. And on the east side, there is simply more inventory to choose from. It takes longer because it's expensive. It takes longer for it to move, and these higher interest rates doesn't help with these absorption rates. So that's that on inventory on the east side. And looking at the median price, we are right at $1.5 million, which is 8% below where we were a year ago, right? Because we came down from roughly almost 1.7 to 1.5, which is still a very high number, but these are higher interest rates and higher inventory counts are definitely putting the pressure on the price, and that price currently is slipping month by month. So then we have our over asking chart. I do like to look at that just to always remind you that 23% of homes last month sold over asking, meaning the home that you're gonna like is likely to go over asking. These are the things on the east side. Let's take a closer look in Seattle. All right, let's talk about Seattle. It's simple. We just touched base on inventory. We're looking at 2.1 months of inventory, which is relatively the same of what it was last year. It jumped to 1,400 units from about 1,100 units just a month ago. So there was, last month we were at 1.6 months of inventory, so we jumped quite a bit in a matter of 1 month. However, there is less inventory than on the east side. So median price is still up 3%, believe it or not. Seattle is still holding on to that $1 million, which is impressive in many respects. So that market continues to be quite robust. and still in the positive digits, where we have over 36% of real estate that is sold in Seattle sells over asking, meaning great homes still sell. It's not a huge amount of escalation, but still could be a significant amount on the right type of a property. So what do we do with it all? Let's summarize. The short conclusion that we could make, I don't know how this ends. Is this a bottom or not? Is it going to bounce back tomorrow or not? Maybe it will get worse before it gets better. Depending on how you're going to look at it, depending on which side of the aisle you're looking at this situation. But what I can tell you today, without giving any predictions, if you're a seller, if you're going to put a home on the market, your strategy is extremely important. There is no let's test the market argument. That thing is gone. You have to be priced well. In a way, you might look into underpricing a little bit, depending on what type of property condition and many different aspects. You have to put in the work because most likely you're going to be competing with another property. So choosing the price, we're in a very different market. So you have to realize it, you have to understand it, and you have to hire the best representation possible to be able to sell the house today, because there are 3 months of inventory on the east side. You cannot hire losers anymore and expect results you had 3 years ago. You cannot even expect results that you had 3 months ago. So you have to be very careful with what you do, how you hire, how you price that property going into the market. If you are the buyer, you have great opportunity. It is. If you can afford real estate, you have 3 months of inventory to choose from. Remember, the home you're going to like probably will have multiple offers on it, right? No secret there. But at the same time, isn't it great? Like, we had no inventory in just 2-3 years ago, and now we have quite a bit. So my rule of thumb, you're not going to be able to time the market. Is this the bottom? Is it going to go more from here, another 8%? Is it going to jump back by the end of Iranian war? Nobody really knows. But what I can tell you is, if you find the home that you like and enjoy, that you can afford, and you can see yourself living in it in the next 5 to 10 years, just buy it. You're buying not some kind of an asset, you're buying a home. Homes are about the lifestyle, not an investment. It's not a stock. It's not something that's supposed to double in value in the next 5 years. Like, these are the lifestyle. So as long as your payments work for you, you like the location, you've chosen it wisely, go get it. And reach out will help you with the rest. Thanks so much for listening. I'll see you next month. Bye-bye.